Hi, everyone. Welcome to Analyze Your Trade, Episode 2 for September 5th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing your trade ideas and suggestions. I developed this show with Dean Jenkins of Follow Me Trades, and he is here to moderate tonight, so I'm going to go ahead and turn over the show to him.
All right, thanks, David. Hey, this is exciting. So this is show number 2. We did this as a trial 2 weeks ago, and the feedback was really positive. The attendees really liked it. The panelists liked it. So we decided to keep it going. So I'm excited to do that. I sure had fun on the first one. And again, this is really, rather than presenting and teaching about a particular trading topic, this is about getting a panel of expert traders with different approaches to the market together to analyze your trade. So it's all about you. And we've got a great panel here tonight. We've got Lentz, Ippolito, Jim Kenney, and Steve Lentz. And what we'll do is kick off, just have each of them really briefly, a minute or two, introduce themselves about what their approach to trading, what they're looking for in setups, their company, just a real brief intro. So we'll go ahead and start with Lentz. So tell us what you got going on, Lentz.
Hello, everyone. I'm Lentz Ippolito. I started off actually as a research analyst for Citigroup Global Markets, and then ventured off into the commodities side of the business. And I did that for a number of years, and then recently I ventured off into options, and more specifically unusual option activity, and then broke that down into maybe 50 or so stocks, mostly highly shorted odd stocks, I like to call them, or junk stocks, and figured out which stocks have insiders, and then kind of really this whole year based my trading on those stocks that with known insiders. These trades might not happen every day, maybe once a quarter, maybe a few times a quarter, but narrowed it down into that selection. My whole game plan now, I like to kind of shoot for home runs. Every now and then I'll do some option spreads and stuff. The whole thing is find the whale, piggyback on them, and go for the ride. So I have a website, Twitter as well, Lentz Ippolito, TradingCoachLentz.com is my website. And then every day for about 2 hours, I'm on AlphaShark.com, where we have a live trading room that actually has an institutional order flow scanner where we can see everything in the options market pretty much throughout the day.
All right, well, thanks. Good to have you here. I know we've been on Timing Research together, and I've always enjoyed interacting with you. And we both got the Aloha shirt thing going on tonight, so we're probably going to agree on all the trades too.
There we go. And by the way, I hope the power definitely goes off, because I'm in Tampa, Florida, and it just started pouring about 30 minutes ago. And now we have this hurricane coming, and I'm representing with the flower shirt, and thankfully yours too.
Very cool. I love your comment about finding unknown stocks. If I see a setup on Apple or Twitter, I'll take it. Profit's profit. But I love uncovering an unknown stock, right? Nobody's ever heard of, and hitting it out of the park. That's just great fun, man. I like that. All right, Jim Kenney, if you just introduce yourself real quick and what you're going on, what you're looking for in a trade.
Yeah, well, what I have going on is I'm a content provider for OptionProfessor.com, and Option Professor has the 7 DVDs for education, and they've had it now for over a decade. And basically, we're in the education business more than we are the market calling business, but I'm going to be here tonight to just, in my opinion, give a little bit of viewpoint if I look at a stock, some of the stuff that I would look at to give me an idea how I felt about it. So basically, I'm going to give you a little bit of I call it the tail of the tape, because a lot of it's going to be on numbers only, and it might be a different twist to what the other guys do, and hopefully it'll add some value to the meeting here.
All right, outstanding. And part of what we say is this is the Siskel and Ebert of trading. So it's great when you get four panelists who agree on a trade, but it can also be really interesting when we disagree, agreeably. Say, are you crazy, Jim? I wouldn't take that trade with your money. So it'll be fun to see how it plays out here. But next up, we got Steve Lentz. So Steve, what do you got going on?
Yeah, I'm Steve Lentz. I'm with a company named OptionView Systems, and we've been in business since 1983, primarily focused on the high-end options analytics software sphere. We rolled out an educational arm called Discover Options about 10 years ago. I ran a CTA for our OptionView research for a while. But we got in the education world, and we have some wonderful mentors who are primarily trading in the indexes, doing long-term campaigning with butterflies and adjustments, and also we got into recently more of the volatility-based, the VXX, XIV trading as well with an advisory that we have. And what I'm going to do tonight is bring to the table our Trade Finder feature in OptionView. That takes the takes your target, and then takes the options that are available on a given stock, and we find the best trade to exploit the target that you have. And so I'll show a few screenshots, and I've gotten the list of the stocks that we'll go over, and hopefully that'll bring some value to the meeting here tonight.
Yeah, very much so. Very much so. Looking forward to it. So I'm Dean Jenkins, founder of FollowMeTrades.com, and as David said in the introduction, he and I brainstormed this idea of just providing a forum where we could analyze the trades that traders are interested in. And I love nothing more than gathering with some experts and looking at charts and analyzing them and hearing different people's opinions. And I learn something every time. So we've got tallied, collated here. Let me share that screen. Get the right one up here. So based on the registrants, the people who signed up for this and what they said they wanted to hear, the top 5 trades, if you will, are Apple, Tesla, Amazon, Microsoft, BIDU, and then we've got Alibaba, Boeing, Western Digital, a few others. So we're going to get through as many of these as possible. This is kind of like speed dating. So we're going to take a stock like Apple, and then it's kind of a free-for-all. Just the panelists can jump in. I'll lead off real quick on the first one, and then we'll pick someone else to lead on the second one. And then if any of the panelists have an opinion, they just say, you can just say something as like, there's no trade there for me. Or I like it, maybe go into a little more depth, or provide an option idea like Steve was talking about. But we really want to move through these pretty quickly. David collects the notes on these, and he'll send it out with the recording of the show. So what we'll do is we'll go through a pretty good number of the ones here on the list, and then each panelist will provide their favorite trade, which may not be on this list, and then we'll take a few on the fly. So if you're logged in on the YouTube live streaming, you can just type in symbols on the fly, and we'll try and get as many as we can here during the show. So first up is Apple. So let me go ahead and share my chart on Apple. And for my analysis, I'm using a combination of Ichimoku Cloud and Elliott Wave. I call it East meets West. And what I'm looking for is an Elliott Wave count, and then I use the Ichimoku Cloud for trend verification or trend change verification. So I think I'm sharing Apple, and what a beautiful trend Apple has been in. It's been in a long uptrend. Just recently put in brand new all-time highs. It's well above the Ichimoku Cloud, but when I see a trend like this, for me, it's too late, right? My next play here is going to be the retracement, and it hasn't given any evidence yet of starting to retrace. So I'm just waiting. Trees don't grow to the sky, and this thing will retrace someday, and that's when I'll be interested in it. So no trade on Apple for me. But what do you guys think? Anybody got an opinion on Apple?
I've noticed the NASDAQ stock specifically, as we start seeing a lot of the MOA names make new highs. For example, Microsoft was one that just made new highs. They're having the new high pullback. It's where they make a new high, take out the prior resistance, and then following day or the following couple of days, they pull back. So stuff like that, I'm not trying to call the top, I'm not trying to call the bottom, I'm not trying to buy it up here. It's just something that I like to pass on.
Yeah, the 200-day moving average on Apple's down around 138 and change. That's 15 to 20% above the market is trading 15 to 20% above it, and it is losing some altitude. And the volume on the 50 days around 25 million shares a day. On the 200 days, 27 million shares a day. So the advance recently has been made on lighter volume than the 200 days. So, you know, this, although it has a great product, I guess, coming up soon, and a lot of news out there, and repatriation money coming, and all kinds of great news down the road, it would not be shocking to see it, you know, fill in the gap between 165 and 135 area a little bit.
That's pretty interesting, because 135 is where I've got Fibonacci retracements on the current up move targeted once if it does give some proof of heading down with, you know, some lower lows, lower highs breaking down through the cloud. So we've got a pretty similar target zone if we get a correction going.
Okay, Steve here. Can I share my screen and show a few things here? Is that okay?
Show it all, man. Show it all.
Let me click here and see what happens. Share my screen. Share my entire screen. That's fine. Share. Let's see here. Oops, time out. Let's see. Is it doing it?
I think I see my screen.
Okay. Can you see my screen here?
There you go.
Perfect.
That's it.
Okay. So here's what I'm doing with. I just want to. In our software, we have something called Trade Finder. Now let me see. Can I? There we go. And so those of you option traders are familiar with these risk graphs. And what we do is cast forward our target. And there we go. And so those of you option traders are familiar with these risk graphs. And what I'm getting some feedback here. Don't know what's going on there. Okay. And so we take our target, 11 data points from across the width of it, and average those outcomes, as well as the deviation between the average and then each particular outcome. And that's the kind of a standard deviation of those outcomes. And then we go into Trade Finder, and what I'm going to do with Apple, and I'll go to the bearish side because I think everyone was talking a little more about the bearish end, is I'm going to cast a target so that we're going to go 2 standard deviations to the downside over the next 30 days, a low point of maybe 141, a standard deviation to the upside of 174. And when you have this wide target, because with option spreads, you don't have to be so precise to make money. In this case, Trade Finder looked at all the possible covered type trades, long puts, debit spreads, credit spreads, butterflies, etc. And it came up with a calendar spread, an October-November out of the money calendar spread, and just one strike price at the 155s, an October-November 10-lot calendar if you allocate $2,000. And when you analyze that, then you get a pretty wide dispersion. You can see the target is in the shaded region, and the calendar 30 days from now is in the highlighted area there. And if Apple does go down, like, you know, is expected here, maybe not all the way down to 135, we get in trouble down there. But this is the trade that after crunching all the possible long, or excuse me, covered type strategies, it came up with this. So I thought that was kind of interesting that it found a calendar out there. And that's the kind of the beauty of using something like this. It can zero in on your target and come up with the one that best exploits where you think it's going to go.
All right. That's pretty cool that it would find that. Yeah. It's nice. Okay. Well, I think we've gotten all the fruit out of Apple. Let's go ahead and take a look at Tesla as the next one up here on the list from the attendees. Bringing up the data on Tesla. So Tesla had a nice run up, but it's under a little pressure, you know, with the Model 3 coming out and some big questions and their debt issue. It had a pretty nice pullback. We actually traded this one and got a nice return on this on a 60-minute chart. It's consolidating right now, right up above the cloud. I would be looking for a potential short on Tesla if it could get down to below this previous low, below the cloud at about 331.29. That'd be an entry for me. and have a stop up here above this last high, and a target down here, potentially around 280. So if we can get a new low here at about 331, I like a short on Tesla. Certainly wouldn't be going long on it at this time. Got bearish divergence and, you know, pretty good signs here of a potential correction starting. That's my take on Tesla. I'd like to own a Tesla Model S, but not the stock. What do you guys got?
Well, I guess I'll start here on Tesla. So I'm a big fan of these, again, the highly shorted names, and, you know, everyone's saying, oh, Tesla is, they're borrowing, so they're cash burning, you know, all the negative fundamental press out of it, and then eventually just goes to the moon, and people are left, you know, how did that happen? Today, actually, in the options market, we saw large call sellers of the September 260 calls. So that's telling me that traders are thinking Tesla stays below 260 by September expiration. And actually, we actually had a pretty large player. He came in and sold like 1,200 contracts of Tesla. And, you know, these are pricey options. You know, they're not 20 cents or so. And the stock pulled a few points to the downside. Tesla is actually one of the moment names that has volatility. So something like selling bear call spreads, even iron condors, if you're neutral on it, I'm totally fine with. The problem with getting directional on Tesla with the options is since they're so juiced up, you really need a big move. And I really don't see a big move to the downside to Tesla unless we have, you know, the market starts really falling hard. And I don't see really anything news-wise to make the stock go up that much. I know it got a big downgrade, I think Friday, or maybe was it this morning? It might be something one has to wait before earnings to have its little run up into earnings and then see what Elon Musk says, you know, going forward. It's a story stock.
Yeah, as far as I'm looking at the numbers here, you know, it had the big run up to about 390, then pulled back to around 300, then a rally back up here to whatever it was, 375 or whatever, and now it's rolled over again. It had great, not great, but it has a good volume setup. 50-day moving average on volume, 7.2 million shares a day, and 200-day at 6.1. So money flow's been coming in there. And Andrew was just saying short interest. You know, short interest is almost 18% of the stock. So there's plenty of people short this stock, no doubt. And the number that looks interesting to me is the 200-day average down at 288, because if they did bring it down and they brought it under 300, the whole world might start selling it. And then, of course, the market makers might be the buyers down there. And the high last year in 2016 was 275. So wouldn't surprise me, 275, 285 holds, but they scare a little bejesus out of people before they stabilize it.
Yeah, in running it through our Trade Finder program, using a similar target on the bearish side, I mean, it was coming up with bear call spreads all over the place as being the best performers there. So you can go up and sell, you know, 400 calls and do a spread, a bear call spread, and then cover it, you know, 20, 30 points out further out of the money and get some pretty good premium. And if you have that, just a 1 standard deviation limit on the upside, and then you can, you know, the yields do pretty well relative to the standard deviation of your return. So bear call spreads were coming up pretty good when I ran the scan.
All right, bear call spreads on Tesla for you. Okay. Anybody else want to own a Tesla? I think the X. I said that's. I actually like the X, man. I'd like to own a Tesla X. That would be really cool.
Yeah, I just went to the Tesla store yesterday, and yeah, they're pretty cool. I'm not gonna lie. I'm a truck guy, but man, those Teslas are, you know, the SUVs are even amazing. The doors, the way they pop open.
Yeah.
I was marking out over them.
Gold wing doors.
Yeah.
Yeah.
All you gotta do is get the right trade, and you will own one. That's right.
I know. I want Elon to maybe tweet something. I get in some weekly calls, and they go up maybe tenfold. And
If anybody can wow the crowd, it's Elon Musk. That's for sure.
yeah, exactly. at the end of the day, he's good. He's good to say the least. He can raise some money too.
He's an interesting, smart guy too. All right, next up is the 1,000-pound gorilla coming out of the jungle here, Amazon. So let's see what we got cooking with Amazon. I know one thing for sure, I wouldn't want to start a business that was in their crosshairs. They're going to win.
Anybody been in Whole Foods lately? The one that I go to has really taken a metamorphosis on in the pricing and the setup of the store and everything else.
Yeah, they had like a 40% price cut, man. Unbelievable.
Yeah. Salmon's from like $14 back down to 8 or 9. Yeah.
Yeah, I like that. So here we got a big impulsive move on Amazon, and it does have clear evidence of a pullback. It is dropped down below the Ichimoku cloud. We got some nice lower low, lower high. We got negative momentum picking up on the price oscillator. There's actually a nice short setup. Now, I would wait for a new low. I got this line drawn here. So a new low at 934.74. All right, we would put our stop up at this high. If it put in this new low, we got a price target, a retracement zone from 850 to 700. So I like that. Pretty good return to risk on this. It's not quite ready, but if it did put in, we got a nice lower low, lower high, lower low, lower high, one more lower low. And this thing's retracing down into here. You know, pretty spendy stock, you know, $1,000 stock. So the way I like going directional with options. If it met my criteria, I just go buy the puts. That's the simplest way to me. I'm a simple guy. But we got some smart folks here. Probably got some other ideas as well.
I don't want to keep going first, and especially agreeing with you. So I'm going to pass on this one right now.
Well, you can pick up the back end.
If the premiums are big, which they probably would be, I guess you'd have to also take a look at the bear put spread, limited risk type thing, and see if that made any sense. But this stock doesn't have hardly any short interest in it, 1%, and it's got 200-day average down at 894, and last year's high was around, what, 800 to 830? So I would think there could be some it bounced off 950 pretty good, but now it's coming back. And then next stop could be around that 900 number, and then after that, if it really got hit hard, maybe that 8 to 830 area might be 3 price levels to take a look at. And the volume on it, 50-day versus 200 days, flat as a pancake. So there's real no indication there.
Yeah, I would like bear call spreads where you're doing your shorts right above the maybe at the 1,000 level, something like that, just kind of out of reach. I mean, if it were to go up back above 1,000, would your opinion kind of change? And then at that point, you know, you could construct it so that you don't lose too much if it does go there. But if it does go the way on the downside, it could be, you know, quite a profitable trade. And you could do that in either the October 6th expiration or go out to the October 20th, you know, the options out there. But yeah,
the 50-day moving average comes in around 990, so that area, you know, might be interesting to see if it can get through.
Yeah.
Okay,
you still a no comment, Lance, or did you?
I can't go on the show and have a no comment, especially on Amazon. It just be. I talk all day, you know. I talk consistently for 2 hours a day, but I talk all day, not to myself. But
you will when Irma gets there, right?
Yeah, I know, right? Then I was actually already thinking of going to Georgia or something, just getting a hotel for a few days, just trading on the laptop. We'll see. But Amazon's an interesting story because of the Whole Foods news. It was probably the first time in a long time I had friends of mine who have no interest in stocks say, wow, Amazon bought Whole Foods. That's awesome. They're taking over the world. I just bought Amazon stock, or I'm buying Amazon. And I was like, oh, you know, you're buying Amazon because it bought out Whole Foods. And if you recall, Amazon popped on the news. I think it was like $30, $34 or something. So it went from about 1,000 to, I believe the following day around 1,030, 1,035. that's when I was getting my retail, quote, dumb money. People message me about it. So let's just assume that dumb money got long 1,000, 1,030, something like that. Well, they're already in pain. They already have the cross of 1,000 to the downside, so now everyone's underwater, and we're starting to have kind of a slow death to the downside on Amazon. Here we are at 965-ish. I want to say a lot of these people are going to start, if they bought on margin calls, and then they just can't take the pain anymore. If we break 900, I think the market has to come down too. You know, we're going to have to see the indexes or something really start coming down. But I do think Amazon can accelerate faster to the downside than, let's say, you know, an Apple or just the overall XLK or Google, something like that. It has a lot of air underneath. The question becomes when. You know, when do we have this sell-off? But Amazon, I wish it wasn't so pricey. I wish, you know, right now the options aren't too juicy because there's really no event coming up or anything. But, you know, lotto ticket trade, you know, buying out of the money puts and really hope that something does happen to the downside. I don't have a problem with it. But on the flip side, if we just kind of trend sideways or go up, you're probably going to lose the full premium of those puts. So it becomes a risk versus reward situation for the trader. If they think a drastic move to the downside can happen in Amazon, personally, I'm not touching it just yet. I haven't seen anything that's making me really want to go out and trade Amazon, even from an intraday to swing trade point of view right now. Maybe on earnings, I'll put on something bearish, but kind of my thoughts right there.
It's part of the FANG phenomenon too, from the standpoint of as the index traders and the ETF traders put money in there, these guys have to buy these FANGs to keep the money flow going in.
Exactly.
Lance, you talked about your friends talking up Amazon because of the Whole Foods acquisition, and that I remember that was one of my key indicators. I remember at the late '90s, right before the dot-com bust, that you'd go to a party and firefighters and teachers and doctors would be telling you why Cisco was a good buy and what a great company it was right before the whole thing blew up. So I'm paying attention to the non-trader chatter, right? That's typically the top of the market.
The best indicator available.
It's anecdotal, but something to pay attention to for sure, right?
Exactly.
All right, Microsoft. Microsoft's been pretty interesting lately, so let's see what we got cooking here on my friends up north. I'm down here in Olympia, Washington, just about an hour south of Seattle and Redmond. What a trend this has been, huh? Straight up. And in terms of my method of trading and analyzing, it is too late to go long and it is too early to go short. There's just no trade here for me. They seem to be getting it together with the cloud and their new subscription-based model. Have their act together and are somewhat leaders rather than chasers. Trade for me.
Yeah, it seems to be languishing between the 200-day at 66 and change and the 50-day at 72 and change, and the volume is a little light on the 50-day versus the 200-day, so it looks like obviously the volume's lightening up a little bit. And Dean, what do you or do you ever consider the PE ratio on Microsoft when it's at like 27, 28? Is that considered a little bit rich?
Yeah, so here's my take on fundamental data is it absolutely matters. But I'm a technical trader, and I believe in the efficient market theory in that all known information about a given stock and company is incorporated into price, and that all I really need to know is right here on the chart in front of me. So I could put the PE is.
Right. I just think
'Cause it's
from
built in.
evaluation, does it always? Yeah, I know the price it might always be. I'm just wondering historically, is this a thing that's gone 15 to 20 most of the time, and now it's 25 to 30? I just didn't know. I was wondering if anybody knew.
Yeah, what I realized was I spent 40 grand on an MBA, and none of that matters.
Now you got to follow the money.
Yeah, I don't need to look at radar maps to decide whether to use an umbrella. I just look out the window, and it's the same thing. I look at the chart, and the price pattern tells everything. What do you guys think? It's an oversimplification for sure, but
just real quick from the options perspective, running the scans for different bullish type trades, we're coming up with some interesting calendar spreads out in between October, Dec, and Jan, playing with those combinations out of the money, mostly between Dec and Jan out of the money. It was modeling it fairly favorably with some pretty conservative stops on the downside if you were to be bullish. Now, I did not do a bearish scan. I was just looking for bullish type trades, and calendar spreads came up as the primary strategy of choice.
There's no big OS upgrade cycle on the horizon yet either, is there? Not that I know of. But they already got a cool subscription model going, which is better for them, I think, and better for the consumer too.
Oh, sure. Yeah. A monthly lease, exactly. Oh, yeah.
Yeah. It takes the pressure off having to, revamp and release new updates.
Oh, well, no, we're still releasing regular new updates. I mean, that's just something we do continually throughout every year, adding features and making things better. But yeah, you're right, though. The model, we have the subscription model that we went to, years ago has really been a positive. Absolutely.
Yeah. Yeah. And did you have any thoughts on Microsoft or Lentz? Or you setting that one out?
No, I was actually trying to find the YouTube channel for the. I was actually watching the YouTube of us right now on YouTube Live. Microsoft. I will say, out of all the, I really don't know why Microsoft's not the FANG index. People don't consider it because it's kind of like the slow creeper of the FANG. If FANG takes a hit, Microsoft usually holds up the best, and the options are really good in it. If you're an option buyer, they're usually not all jacked up like a Tesla option or a Google option, stuff like that. And I like it because it's cheaper than most of the FANG, so you could get some out of the money calls or out of the money puts for cheap and try to flip them out for a double or a triple in relatively short amount of time if you could catch even a 1-2% move in Microsoft. So I like it. The chart's very bullish. I feel like every time it makes new highs, it pulls back for a day or two. But it's a stock. I'm fine with playing directional. It usually moves great for earnings too. It usually takes out the market makers move. If I kind of had to pick one of the FANG names, I had to get long. I think Microsoft might be on the top of my list.
All right, that's cool to know. Very good. I had to drop the YouTube. How do we look on YouTube, Lentz? Can you see it? Are we looking good?
I just switched off, but we were looking good. There's maybe a 5-second delay. Okay. That's not bad at all.
I was getting an echo, so I dropped it. So, David, if you're monitoring, you see any good questions come in there, we can field them on the fly.
Yeah, I asked the people too if they have any questions. Feel free to post.
Let's jump over to BIDU, BIDU, and see what this looks like. And let's see, BIDU is number 5 on the list. So after we do BIDU, we'll do a round here and get the favorite trades for the panel, each person, what they really like today. Well, BIDU's been pretty explosive this summer, hasn't it? Went from 180 up over 230. That's a nice impulsive move. That would have been a good trade to catch as it broke out. It would have been channeling pretty much, somewhat volatile sideways channeling move. it would have been a good trade as it broke out. I wish somebody had asked about that in late June or no, here in mid-July. I would have been on that one. But that trade's over, and it's not really clear. It's consolidating. It put in a new high. Looks like it's losing momentum. So there's no good setup here for me on BIDU. But here in the next round, I'll actually show what I think is a good setup, what I'm looking for. But nothing for me. I love these ones that trade at monstrous volume, particularly, this one's what, 3 million shares today. I like liquid stocks. I like unknown stocks, but they got to have good liquidity, have a good market going for them. BIDU's not unknown, but I like the volume.
Yeah, I've kind of switched this past year too to a lot of these odd China names, Sina, WB, BIDU. Obviously Baba and JD up there too. But BIDU is like the king of coils, I call it, because it coils up and does nothing. And then out of nowhere, it just unleashes like a spring. And we saw that late June there. Because before that, if you try to get directional on BIDU around that 180 mark, you were just getting chopped away unless you were selling premium or condors and stuff like that. We had to move in BIDU. Here we are coiling up again. The China names, they like to have big moves and then go quiet. I don't know when the timing is, but as long as the China market holds up and these China stocks continue their bullish momentum, obviously if the overall market holds up, I think we have another move to the upside on BIDU again. On volume as we take out the recent resistance. Just when does that happen? I don't know. If you are playing it with stock or options, it's one of the names where you can't get cute with the short dated options. You have to go out in time. If that requires selling, a bull put credit spread to finance a long call or long call spread, so be it. But BIDU is just a name where it's very difficult for timing. If if you have confidence it's bullish, give yourself time. It's kind of the way I look at BIDU. I don't even follow an intraday because I know it's just going to chop me up.
I like that term. It's a coil stock, right? Coils up and then strikes. Like a snake, right?
Yeah, the king BIDU snake. Coming out of nowhere, and then everyone chases it, and then they get chopped up. It was a nice move, though. I'll give it credit. It was a beautiful move, especially for BIDU.
Yeah, a lot of people were bullish around 170, 180 when it took off, and they got a nice run. There's a gap in 210 on it. It might come down and fill if it has a correction, and the volume on it is excellent. As far as the 50-day, 200-day, and Baba is not not dissimilar to it either. But as far as the technical and the price of Baba, pretty extended here. But you have that Chinese stock market holding that 3,000 mark and starting to turn up, and their numbers are starting to turn up. And obviously, shorting China, as Jim Chanos can tell you, is not the easiest thing in the world.
You got that right.
So yeah, those are a couple of lead dogs, and on decent sized pullbacks, they're probably still going to be the lead dogs looking down the road.
Right. Did you have any thoughts, Steve, on that one?
Yeah, let me go in here. I want to show you a let's see here. I'll share my screen and just show you real quick. Oops, timeout. Let's go down here. But put me up at the top of my. On BIDU, I threw in just a target of a half a standard deviation to the downside and 2 standard deviations to the upside, and it shows that it found this diagonal debit spread that's real interesting. And this is and I agree with the comment that you kind of have to go further out. And this is the beauty of spreads. You can piece these together, and when you analyze this, this is the half a standard deviation to the downside. So you could see that your loss, depending over the next 30 days, is fairly minimal on a half a standard deviation to the downside. And if it does go up, you have quite a bit of gain relative to that. So There are some spread opportunities in this options chain in BIDU that really can, I mean, it offers some great flexibility. And but I agree, going out in time, just to even get a 30-day return, you have to go out, you know, the October, November, and piece that together. So just thought I'd share that. It's a good set of options, very liquid, 12 million traded per day, I think, something like that. So pretty good.
All right, cool. The diagonal. So this round, what we'll do is each of the panelists share a trade that you like right now. And I have a GDX up. So I said at the outset that I use a combination of Elliott Wave and Ichimoku Cloud. So what I look for is a big impulsive move, and we sure had that on GDX last year. Then a retracement right into a Fibonacci retracement zone. It's these blue lines. I get a little busy here with my my analysis. Here, let me slide that over. Right. So so big impulsive move, nice correction. Now we have the next continuation of that original trend, right? And that's kind of how price, when you see this pattern of a big impulsive move, a retracement into a Fibonacci zone, and then a breakout, is an Elliott Wave 5. It's real simple. Nothing fancy, no super cycles or minor cycles or none of those, you know, permutations. It's just an impulsive move, a correction, and a continuation. We got a target up here, 31 bucks on GDX. We just got long on this last week, and there's still plenty of room to get in. Got to stop here at this last significant support area, and it's off to the races. We're already in about 5% profit, and nice reward to risk on this trade. You know, even with an entry here at 25 and a stop at 22, that distance is a lot smaller than the entry to the target, right? That's about a 2 to 1, 2.5 to 1, and I like that a lot. We're in it, and publish that to my subscribers, and they're all sending me notes and smiling and pretty happy. And I just like, on a directional trade like this, when it's really clear, high probability move, to go buy the calls. And so I think we're in January calls on this one. And I like, you know, on a directional trade, I like going deep in the money and getting high delta and you know, get a 2x or 3x on the premium and get out of that thing up in the target. So that's what I like, right? That's my favorite trade right now is GDX. So it will go. Steve, do you have a trade that's on your radar you want to share with the?
You know, I was so busy getting ready for all the. I went bullish and bearish on all those stocks we had. I didn't have a favorite. I do. I'm intrigued by the BIDU trade I just shared and doing that diagonal on the bullish side. But that I just showed it. That one looks like it had the best return relative to risk. But I hear you about BIDU being able to coil and go. But that one looked like, of all these that we've shared, that one appeals to me the most.
All right. So that'll be your pick. Jim, do you got one up your sleeve there?
Yeah, the couple things that I do, Dean, is that I do talk more in strategies than specific trades. So basically what I have been telling people about is, and as the market rolls over, it's looking smarter and smarter, the collar strategy around positions that you're trying to put parameters around so you don't get caught in too much of a downdraft, if there is one. And then, of course, the strangle strategy when that VIX gets low to 10 or less, or 11 or less, and if you want to see if you can catch some volatility. The bond market was a good classic example today of where low volatility can turn into high. The strangle positions pretty quickly because those yields were really collapsing here today big time. I did just want to chime in on the GDX, though. You know, it's got a short interest of 21.34% according to my screen. That's a heck of a lot of short interest in there. And the volume today was 40% higher than the average volume for the last 50 days. So 50-day volume coming in at 42, and you're at 59. There's a lot of believers out there today. And with 21% short interest, there's certainly plenty of skeptics as well. So it'll be interesting. The moving averages on the 50 and the 200-day have converged at around 25.5. Your line in the sand around 22 looks like a decent line, and you certainly are getting a crowd behind you as we speak. Huh?
Very good.
Yeah.
Well, Lance, what tickles your fancy?
Oh man, But yeah, it's so hard for me to pick just one out of these. A couple of stocks I am watching that are odd, to say the least, are Match.com, a breakout, and Overstock as well, OSTK. Overstock, actually, if people don't realize, the CEO is really big into Bitcoin, and the Overstock actually accepts Bitcoin. So it's almost a Bitcoin play at Overstock.com. It's crazy as it sounds. But I could go on for that for a while. But my trade, to kind of get more of a stock people know about, is Bristol Myers, BMY, rotation into biotech and healthcare. Obviously, biotech, much more fun in my book. Healthcare already pretty bullish. But Bristol Myers, pulled up the chart right there, thank you. We started to see last week big call-off activity in the 59 and 60 strike calls, and most of these two were short-dated all the way at September expiration. So here we are, coming up right there. I like BMY because in this bull market, every time we have resistance, stocks usually just shatter it on elevated volume. So I like to see that as a clean breakout. I think it has run up to 60. I took along with 59 calls. And Bristol Myers, and actually at the time, now you can see they're in the money. I actually went, at the money at the time, which is odd for me. Usually I like cheap out the money call options to try to make a better ROI. But Bristol Myers, it's healthcare exposure. That's kind of what I like. We saw a slight pullback in some healthcare and biotech today, and then they continued in the late afternoon to rally. Pfizer was another name that caught my eye as well in there. Pfizer, Bristol Myers, starting to see some Merck activity. I like these names that need to play year-end catch-up, and that's consisting of biotechs, some healthcare names, high beta energy that has got really beat up, and small caps and micro caps like your Match.com and your Overstock. So kind of the whole gambit there, but this chart, the more I look at Bristol Myers, the more I'm falling in love with it.
I like the healthcare and I like some of the small cap pharmas. We took some over the last few months and did really well. Here's Gilead. We just closed Gilead today. We caught that at 67.70 and closed it today at 82.
Beautiful. I mean,
so
they're
pretty tickled with that.
Beautiful runs that have potential, and a lot of these, a lot of us as traders, we go to 5-minute intraday, or we go to a daily or 4-hour hourly. If you zoom out, go to a monthly or weekly chart, 10, 15 years out, and you have Gilead right there. The stock was $123 stock not too long ago, and we had a nice move off the lows. They have a lot of room to play catch up compared to your Facebook, your Apple, stuff like that are sitting, right here at the highs.
Yep. All right. I think we got everybody's trade idea. So let's. Hey, David, do we have any questions online that we want to address, or any charts that people are typing in there we can take a look at on the fly?
No, not yet. No, not yet.
Okay. Well, if anybody listening in has any charts they'd like us to look at on the fly, go ahead and type it in there on the YouTube stream, and we'll go ahead and fire through a couple more of these. Speaking of healthcare, I'm going to jump down here. Here's UNH that came in. Let's take a look at that because we're talking about that sector. United Healthcare. Well, there's a trend, right? That's the.
Yeah, there you go.
There's a trend. And again, for me, if there's anything I hate as a trader, it's chasing a trend. I just hate it, right? I want to catch it at the inception or after a big correction and when it's going to continue. It could. Who knows? It could double from here, or it could correct from here. There's just no way to know, right? It is losing momentum. Here we look at the price oscillator. Momentum's coming out of this uptrend, and so one of these days, right, it'll start correcting, and that's when I would start getting interested. If that's anything, that's my blind spot. I just refuse to chase a trend. right? Once it's mature and established, I'm not going to jump in.
We have some live chat ticker symbols to look at from here. I'm getting on from the YouTube live. So a couple names here are DXD, which I believe is the ultra short Dow.
Is that EXP?
The DXD.
EXD.
I want to say it's ultra short Dow. DXD. So David Xavier David.
DXD.
I must say, I love the
Dow.
leverage ETFs at times. There we go.
Is that leveraged or is that straight? I can't.
I want to say it's leveraged, but I always like the people who come into the leverage products because they like to roll the dice.
Yeah. You know, the S&P is clearer to me than the Dow. The S&P looks like it is potentially setting up for at least a short-term pullback, and the Dow will go with it more than likely. If so, these leveraged inverse deals, they can pop. They're kind of like your coiled deal, right? When these go, they can go. But they can also bite you. And you got to know there's some of them have some subtleties about them, about settle dates and futures rollovers and stuff that can. They may not, you know, like particularly the VIX and the leveraged natural gas stuff. They're not going to retrace to Fibonacci levels to their highs, right? That ain't happening. Right. So you got to know the instrument a little bit, and I'm always a little cautious until I really understand what's going on.
We also have SU, which is Suncor Energy. It's actually a fun name, SU. This name actually had institutional call buying last month, and buyers kind of dried up recently.
Yeah, had a nice little pop here. I would worry about this this previous high as a resistance. We bounced off it, and it's for the whole year, it's almost been in a fairly big channel here if you count this low, right? There's no trend for me. I need an inception of a trend, and there's not one here, and it's coming up against some pretty significant potential resistance. It's hitting the cloud for some support. So I wouldn't trade it with your money.
The volume today was about 50% higher than the 50-day average. So there's some people coming into it or doing business in it right now. But like you say, above that 34 area, it would probably hit your radar a little harder.
Yeah. If it could break that, then there could be a real trend emerging there.
Right. And maybe this volume is telling you that it might be doing that. Who knows?
Yeah.
But 50% jump in the normal 50-day volume is, nothing to sneeze at. And all the moving averages come in around $31. So you're right on the ledge.
Yeah.
So if it started going above 34, it'd be leaving the ledge,
Yeah. Yeah. Any more coming in there, Lance? Sounds like you got the feed.
Yeah, we have a biotech name, I believe, RGNX. And this chart is quite stunning. We can pull it up.
That's it?
There you go.
RGNX
like
Bio?
Yes, it's like a mini BIDU.
Yeah, it actually, I think it's just put in a new high here. Just broke. So that could be a new trend forming there. Traded 500,000 shares. So if that's like the 10-day average, that's enough volume for me. It must have IPO'd back here and totally tanked last year. But it looks like it's starting to get some life. And then new high today. New high since the low. So that has a little bit of potential.
Yeah, the volume today is about almost more than double the 50-day moving average of it. So that's a pretty good jump.
Yeah, there might have been some news coming out on that one or something.
Yeah, according to this, they're losing money, but apparently that doesn't bother many people.
No,
Hey, Tesla's losing money, and they're trading at
That's what I'm
what's their
saying.
market cap, you know?
Who cares if you make money? That's irrelevant.
So I don't know.
Yeah, this.
I mean, some of these names, these little biotechs, they have potential to run, and this is just, you know, an example of not a lot of people have heard of this name, but then you have the stock just run up like that. You might wake up next month, the stock may be in the 30s, and you're like, what? What is this? And you relook it, and then people start chasing. Wow charts like that I really like.
Here's one I found in a scan. We just traded this. We're just taking our first profit. I mean, who ever heard of Calumet, right? Calumet Specialties.
Sure.
You know, but we took this thing at $5, and here it is up at 8, right?
What a base too.
Look at that. Look at that thing. You know, when it breaks, you know, and where did it come down from, right? My goodness, you know, over $30 or something. So this is a nice retracement. So we caught this one. We just took our first profit today, and pretty happy with that. I love finding these, you know.
Hidden gems.
Calumet, who are they? Who cares, right?
Exactly. We also have one in the chat, USO. That can probably talk up some discussion there.
The oil ETF, the big one. Oil is a complete disaster, in my opinion. Right. So if we look at the whole year, all of 2017, we've got a radical, wildly swinging downtrend, right? With lower high, lower low, lower high, lower low, lower high. We just had this gap today. This could get being broken, right? Where this downtrend could actually be over, but not sure. And it's too volatile for me. I've traded oil before. I like it, but when it starts trending, it can trend really, really well. But this is too unpredictable, too swingy. There's a very technical term. It's very swingy for me.
I like it. There was some activity in the OHI, the oil ETF. It's if you can pull it up there, OHI. The chart is absolutely hammered up until really the past couple of days. It's starting, and I mean starting to move out of the base to the upside. Today was the first day, or OIH, pardon me, OIH. Pardon me, I was looking at it and see $32. And I'm thinking, what? Today was the first day we started to see some institutional call buying in that oil ETF. I don't really make much of it, but oil did have a nice day. The ETF was up around, I want to say 2.5%, so pretty much mimicking oil. But I usually don't touch USO. It's just too cheap for me.
I like this. This could be setting up. I'd like to see it break the Ichimoku cloud. We could get a really nice retracement up into the low 30s on this if it does.
Yeah, traders were coming after. They were buying aggressively. 4,000, I believe, were bought at the ask of the October 25s. So, they got they put in quite the base and starting to move out of it. It's just I don't know where oil trades exactly. That's my big thing. I'm not too big of an oil guy to say, hey, oil goes 50 plus, or oil goes back to the low 40s.
Yeah.
They were saying that we're the largest oil exporter in the world now, which is quite a change from years past.
That's unbelievable.
This energy spider, the XLE, had pretty good volume today, about 20% more than normal, and then the prices were up a little bit, and it's coming into some. It's got over 13% short interest, so
yeah, there you go.
It's got a lot of people on one side, and then you've got 65 area, 70 area, 69 area on the averages. So it's not too far away from trying to make a turn if he can keep its legs underneath it, which it hasn't been able to do all year long.
Exactly. I mean, in my opinion, I like the individual oil names, especially the high beta oil names for potential short squeeze. I even like the ETF we just showed there better than the USO, and the XLE is just it's at a trend line resistance, and it fails every time. There's something about XLE, it just does not trade well. There's better names out there if you're going to go bottom fishing.
Yeah, I
Halliburton seemed to get some action today, huh? Halliburton, HAL.
Yeah, there you are. It broke that 40, and now we're seeing a
and
nice little comeback.
And the volume was about 10.
That's funny. Halliburton looks pretty much like XLE.
Yeah, there you go. And the
had 60% more volume or so than normal, and the thing was up about 2 and change percent, and it's still trying to catch a falling knife though, because these averages are still coming in at 41 and 48. So the train's still giving you a little bit of a feeling that it might bounce out of that 38 area, 35, 40 area, whatever. But one day does not make a trend, right?
That's true. That's true. Hey, we're an hour in, so let's go ahead and make moves to wrap this up. What we'll do is go around one more time and see if you've got any closing comments, any final thoughts. If you've got a website or a link you'd like to share, that'd be awesome. And we'll just start. We'll go Lance, Jim, Steve, and then I'll close out. So Lance, any kind of thoughts to leave people with, or something you want to share?
If anyone wants to contact me, they can. Lance Ippolito on Twitter. I was posting in the chat there on YouTube. My phone just died. You could also email me, lance@alphashark.com. Pretty much, my Twitter's great for communication as well. I post stuff throughout the day. But my whole thing with trading in general is I try to work on the emotions, try not to get too caught up, especially now with the market kind of where it's at near all-time highs, and with this news coming every week. I keep it simple. Trade like the market goes up, buy. If it goes down, sell. Trade like an idiot, basically. Not overthink everything, not analyze it, and just sit back and have it be a repeatable, enjoyable process instead of fidgeting. If you can't sleep at night, your position is too big. Kind of a stress-free trading too. I've also gotten Slack. One of my tech people gave me it or told me about it for messaging, which is a pretty cool tool to write stuff during the day about the market and trading and such.
I like those pearls of wisdom. If it's going up, buy. If it's going down, sell.
Yeah, I mean, I'm not calling tops or bottoms over here. So I'm just trying to catch some meat and potatoes of the trend.
Very nice. And I also like your comment. I do that in the courses I teach. Go, yeah, if it's keeping you up awake at night, your risk control is not under control. Your position sizes aren't right. Trading should be fun, man. It is fun.
Exactly.
Yeah, good thoughts. All right, Jim, anything to leave us with?
Yeah, what I normally do because of my contribution to the Option Professor DVDs is learn the option strategies as much as you can. Try to learn as many as you can so you can have a big menu of choices when you look at any setup. And I have been very much encouraging people to folio hedges like collars and married puts, and also the strangle strategies when this VIX gets low on some of these markets, because volatility does seem to be picking up a little bit as we hit the September month. The only thing I'd also leave you with, as long as we see 2,400 on the S&P, 9,000 on the transports, and 6,000 on the NASDAQ, then a neutral to a more positive stance on the market makes sense. So if we do get pullbacks, they could be pretty good buying opportunities as long as some of these major areas can hold up. So it'll be interesting to see how things shake out, because I do think there's going to be an acceleration in news between now and December. And for those of us who'd like to see the market move a little bit, unwelcome news.
All right. Thanks. Thanks for being here, Jim.
Sure.
Steve, any closing thoughts for you?
Sure. Well, just thanks for having me along here. We focus quite a bit on volatility in the markets, primarily the S&P 500, and in terms of selling premium from a market neutral standpoint. And if the folks out there want to dive into some of those advanced strategies where you're trading from a more market neutral, where it doesn't really matter if the markets go up or down, then this is give us a shout at either OptionView with the VUE, OptionView.com, or DiscoverOptions.com.
All right. Sounds good. Thanks. And again, I'm Dean Jenkins of FollowMeTrades.com, and it was fun to moderate the show. Thanks again to David for putting it together. I'll share my home page here real quick. You can, if you want to find out more about Follow Me Trades, it's FollowMeTrades.com, and we've got several products here: Stock Picks, Trading Room, and some courses. If you want to go read about those, and if you want to just find out more and put toe in the water for free, I got a free weekly newsletter where I analyze the markets and come up with some key levels for S&P 500, gold, and oil. So great to be here. Really enjoyed it, and thanks once again to David for putting the whole thing together. And go ahead and send it back to you, David.
Yeah, thanks, guys. Great show. Just a reminder to everyone watching, be sure to hit the subscribe button on YouTube to get updates on future shows. Also want to remind everyone that we're going to be doing this every Tuesday night at 9 p.m. Eastern, and the older show, Crowd Forecast News, at on Mondays at 1 p.m. Eastern time still. So just want to thank my guests again for this episode. Jim Kenney of OptionProfessor.com, Lentz Ippolito of AlphaShark.com, Steve Lentz of OptionView.com, and Dean Jenkins of FollowMeTrades.com. Thanks, guys.
Thanks.
Thanks, David.
Yeah.